question is for Chair Gensler. This committee has examined numerous issues that have arisen out of the GameStop short squeeze that took place earlier this year, including systemic risk arising from firms such as Citadel, who are executing close to 50% of all U.S. listed retail volume. During the first hearing, I questioned whether Citadel poses a systemic risk to our financial markets. I'm also concerned about what Citadel's outsized market impact means for pricing and best execution, another market structure issue that this committee has examined as part of these hearings. As the newly confirmed chair of the SEC, what will your approach be with respect to mitigating the risk associated with outsized market impact and understanding threats to our financial stability?
I thank you for that question. I thank you for that question. I think that at the heart of well-functioning markets and the mission of the SEC, fair, orderly, and efficient markets, is promoting competition in markets. It can be done through transparency, but it's also by looking at our rule set to make sure that our rule set inspires more competition rather than concentration. And we have seen, as you noted in your hearing, an increasing concentration in market making and also separately in brokerage, and particularly around retail order flow. And so I've asked the staff, both from the Division of Economic Research and Analysis and Trading and Markets, to sort of give us a view, give internally the commission a view. What should we be thinking about in our market structure to address this? We've seen such concentration come in other markets. We know it's in search. When we all go online and search, there's really one dominant search engine. We know it's true in retail, buying retail products online. There's some dominance to that. And so our modern 2020s economy does tend towards certain, what's called in economics, network effects. So I've asked the staff just to think through that and to help provide us with guidance as commissioners. How do we promote competition in the face of these network economic effects that are leading to concentration?
Well, I want to thank you for that response. And I think what I'm hearing from you is that there is real concern about concentration. And while you have instructed staff to do some additional research to determine the extent of it, it is something that we should be concerned about. Is that correct?
Yeah, yes, I think that capital formation for issuers and for investors on the other side benefit from some broad competition amongst market actors. And as we get more concentration in the middle of the market, whether it's market making or brokerage, we could lose that concentration, could lead to more fragile markets, meaning less orderly, and also more costly or less efficient markets. And that's what history and economics tell us when we get concentration.
Well, thank you very much. I appreciate the concern that you are identifying as you talk about this concentration and what could happen if, in fact, we're not aware and make some efforts to deal with it.